Good morning, it's Joe Olson here. I'm coming at you with another variable rate update. So what's happened in the last week? Now, since April 17th, we had a a 0.5% increase. Prime is sitting at 3.2, and if you had a variable rate of prime -1, you are sitting at 2.2 interest rate. Are you recommending locking in? The answer is no. And what's happened last week? We have seen now some housing data come out for how the rate changes have affected things. In the GTA, which is Toronto, we're looking at Toronto and the surrounding areas for that matter. We are looking at a 15% drop in prices in some of the area, as well as we are looking at almost grinding to a halt in some of areas of Toronto, the housing market, as far as prices. We're looking in Vancouver, the data is still not completely out, but them having a very substantial drop in sales and stagnant on prices. Even in the interior, we're seeing early reports saying 25 to 30% year over year decrease in the amount of home sales. Now, it doesn't necessarily mean home sales across the board are going to go down. You still have an inventory problem, and there's still some issues that way. But as far as quelling what they want to do, the insane housing market, I think this puts a very good point that we have seen the end of rate increases. Now, this prediction has not come out, and prominently people are still talking about the rate increase, the rating happening in June. I suspect that you're going to see in the coming weeks that changes in some manner. That's my guess. Now, why is if you're really savvy on this stuff, and you see today the Fed in the States is meeting, they're likely to raise their rate by 50 basis points. You see many European countries, Australia, the UK meets tomorrow. They're talking about raising rates. What makes Canada different? Well, first, the one thing I would add to that is that something that maybe is not prominent is there is countries that are decreasing rates. China, Japan, their central banks decreasing rates. But the big thing in Canada that we must keep awareness of is how much of our GDP is tied to housing. So GDP is gross domestic product, and how much of our GDP in Canada is tied to housing. And there's varying degrees of opinion on that and statistics, but a 30 to 40% is where some people peg that out. So housing affecting a really big portion of what inflation is. Now, so the idea that maybe that rate increase stops and doesn't come forward in June, I think, pretty likely. Now, do I think that rates go down next year or something like that? I still think that's a distinct possibility if we go further into recessionary territory. Now, I want to reiterate a couple things. So I think that the rate hike, even though everyone's saying it's happening, I don't think it's a foregone conclusion, especially anymore after what we're seeing in the data, that we're already pretty much effectively changing down the marketplace. Now, why do they raise rates in the first place? They raise rates to curb inflation. So the idea here is that, and I don't think a lot of people understand this, they're raising rates to make it cheaper for you in some way, so that cost of goods don't go up. So that's the goal, and if that goal isn't being accomplished, they have to do other things around that. The other thing that I want to leave you with on this is that they didn't just raise rates, they stopped quantitative easing, which is their bond buying back program. So, which is, in a nutshell, is a way in which they create liquidity at a bank and continue to print money. And so they stopped that as well during raising rates. So there really has been a lot of activity that has slowed some things down here. And so anyway, next bank meeting is happening June the 1st. Again, let's reiterate a few options here. If you are worried about your payment going up, you could go to a fixed variable payment. If your lender doesn't offer that, which some lenders don't, we don't actually recommend that as being the best product. But you could do that if you're really, really terrified. So talk to me if you want to redo it as far on just on the payment range. Secondly, we are really recommending, why don't you consider that rates are at 5%? Do I think they're getting there? Not likely, but if you move your payment up to a 5% rate, you're going to see no more payment increases, and you're going to chunk off a ton of principal off your mortgage. So that's option 2. Option 3 is that we could really redo your mortgage as a whole if you're really scared about something or whatever it is. But remember, your mortgage has been priced and qualified based on you having a 5.25 rate. again, if you want to chat about your mortgage in any way, I'm happy to do it. I am again encouraging you not to lock in. Now, the last thing I want to leave you with on why we're not locking in is that do not forget about these IRD penalties. If I sell, if I need to refinance, if I get divorced, this penalty is 5 times greater to get out of on a fixed rate over a variable rate. And we are in an unstable world, and 70% of people are going to initiate that penalty. And we talk to people all the time. Don't think about selling, but now, anything like that, that's going to make a big difference. So the pressure to lock in from a bank is very profitable. Anyway, as always, please subscribe to our channel. Please share these videos with whoever you can. And if you do want to talk about your mortgage, please do reach out. I'd be happy to help.